Hello dear traders, let us review the major economic events of the past week. Last week the US stocks and dollar index edged lower. The stock market dynamics was affected by the negative S&P 500 earnings expectations in first quarter this year, which are estimated to have fallen by 7.3% compared to the same period of the previous year. Dow Jones and S&P 500 stock market indices closed the week 1.2% lower each, while Nasdaq lost 1.3%. The US dollar fell against other currencies after the Fed chair Janet Yellen said the policymakers shall be cautious with the interest rate hike. Almost whole week, the dollar index fluctuated in a narrow range with the most drastic decline on Friday. On Monday, the US factory orders for February came in 1.7% lower, while the January reading was revised down from 1.6% to 1.2%. Meanwhile, the February transportation orders dipped 6.2% and for power generating machinery by 3.6%. Labor market condition index fell by 2.1 points in March. In general, it is not the key indicator, but it showed record slump since June 2009. Some investors even expressed concern the US labor market may be in worse state than thought. On Tuesday, the negative US trade balance for February widened by 2.6% to $46.06 billion. Inflation-adjusted deficit is $63.3 billion, which is the record high since March 2015. For this reason, several multinational investment banks cut their forecasts of US GDP growth in first quarter 2016 to 0.4% year-on-year. This is far below the 1.4% increase in fourth quarter 2015 and the previously expected GDP growth of 1% for first quarter. On Wednesday, the March Fed policy meeting minutes were released, indicating no interest rate hikes are expected till June. As a result, the US stocks ended higher. No policy meetings are expected in May, while they are scheduled on April 27 and June 15. On Thursday, no significant macroeconomic data were released in US. The US dollar tumbled to 17-month low against the Japanese yen. Investors considered it as a result of heightened global risks. US stock market indices also closed in the red. Nevertheless, on Friday, they rebounded on positive data which showed lower wholesale inventories for February. Moreover, several Fed presidents confirmed the April interest rate hike is unlikely. This week, investors will stay focused on quarterly earnings in US. On Wednesday, major US banks JP Chase, Wells Fargo, Bank of America, and Citigroup will release their quarterly reports. Market participants expect the gross earnings of US financial sector to contract by 9.6% as a result of first quarter 2016. Moreover, the significant macroeconomic data will come out on Friday, the retail sales and producers price index. The March inflation data will be released on Thursday, and the consumer price index for April by Michigan University is to come out on Friday. In our opinion, the forecasts in general are positive for the US dollar, while the stock market indices dynamics will depend on corporate earnings. This was all for the past week. Happy trading and see you next week.